What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 17th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I'm here to answer the biggest question on everyone's mind when it comes to Bitcoin and crypto. Why are Bitcoin and cryptocurrencies as a whole trending down? Why have we been stalling for the last 3 months? Why are we not able to clear through the prior all-time highs? And why is it high time to start preparing for a much more substantial pull down to the downside? I'm going to be talking about all that and more as we go throughout today's video. I'm talking about some altcoins that I'll be watching and everything you need to know in order to understand why this is happening and how to best prepare. If you like this video, consider dropping a like, and let's go ahead and not push it off any longer, guys. Let's kick things off. So I want to go ahead and just analyze price action for what it is. Whether or not, people want to see things in a bullish or bearish way, I like to stick to some of the more simple metrics here we can utilize, and the moving averages tell us everything here. The 21-day has been stalling and basically ebbing and flowing here since back in mid-March for over 3 months now. And the 100-day moving average is cozying up a lot more with price than it was back here in March. We were getting a lot more comfortable retesting these longer-term moving averages and with a lot less resilience from what we had in the past, where we saw buyers come in here extensively in May at the 100-day, or even here as well on May 10th, where we soon after resurged back up, testing very close to the prior all-time highs. Now we are just kind of mingling within the 100-day pocket, and that is not showing me that bulls are resilient at this level, that they are confident, that they're applying excess amounts of liquidity or buy-side pressure. This tells me that the market is ready for lower prices. At a minimum, likely coming down here towards this prior range at around 60K that was tested multiple times, and more likely than not, breaking the 200-day moving average and testing the level we've talked about for some time, which would be down here around 50,000. Now, why am I so confident that we could see some kind of extensive correction here considering existing price action? Well, the price action alone, as we discussed, is already showing us signs of weakness here. And we are very well due for a substantial correction in price in accordance to history. But beyond all of that, let's go ahead and talk about the thing that has been driving this cycle, the ETF. The Bitcoin ETF. This has been the catalyst for this cycle. It is the reason that if you were buying when no one else wanted to, when many people, including myself, were relatively doubtful of an ETF. I'm gonna be humble and tell you guys when I get things wrong, when I get things right. And we got things wrong then. We were very doubtful that the ETF applications were going to get approved, let alone, at the end of the day, they did. And this was the core reason for this entire rally, because for once, since back in 2021, where the liquidity had really dried up in crypto, the additional wave of buyers had been questionable. Where were they going to come from? The answer was clear. It was the ETF. Now, in order to understand where Bitcoin's price is going, we need to keep a sharp eye on global ETF inflows. And thankfully, HODL15 Capital, page on Twitter, puts together these really great kind of compiled data sets on all of the ETFs. Now, there are some other people out there as well doing similar things, but this is probably the best out there. It does a really great job of tracking all of the global exchange-traded notes or ETFs, and along with that as well, the US ones, so it categorizes them. What's really great, though, at the end of the day, though, is that we get a full-on data set to see where the ETFs are going. And there are a couple different visualizations I'm going to show you today that I think will put things into context and answer this question about why it seems Bitcoin can't really break away from its prior all-time highs. Let's take a look here at the current US inflows. So over the last week, we actually saw a net outflow here. This is something, again, that's relatively new data as of this past Friday. So we saw at the close of the week that there is essentially an outflow on the week-by-week basis, which is not a good sign to see. This sees capital essentially moving out. Now the ETFs are actually a spot seller for the past week. But I'm not here to get you guys to panic about one bad week. You have GBTC outflows sometimes, but you also may very well have outflows from some of the existing ETFs. Right? An example of this would be the Fidelity Wise or FBTC ETF. You can see very clearly that we had more than 2,000 Bitcoin removed from that ETF product. We had for Grayscale, again, more outflows, about 4,000 Bitcoin, roughly speaking, coming out of the ETF here. You can see it here in the numbers. We can see also along with that as well, a net outflow of the ARK 21 shares Bitcoin ETF from 49,000 to 46,786. We see here a slight outflow of the Bitwise ETF. And you just see this pattern repeating and repeating in so many ETFs, from the Valkyrie, Invesco, and Franklin Bitcoin ETFs. right? Wisdom Tree and also the hashtag Bitcoin ETF, these are so small, it doesn't even feel like we're talking about them. All neutral or generally outflowing. Right? But again, I'm not here again to get you guys to panic about 1 week. We can see broadly speaking here that yes, over the grand scheme of things, since back here in March, the US not only has more Bitcoin stored in ETFs over the last 3 months, but along with that, globally speaking, we've added a little bit over about, or we're actually coming up close here towards around 50,000 Bitcoin, depending on which week you're talking about, right? So it sounds like still the ETF story is a success to many people, right? We're still seeing that number creep up slowly and steadily, which means more demand for Bitcoin. What's the problem here, right? Well, I'm going to talk about that here. The first thing we need to dive into here is talking about the weekly data visualized here. So this is the week by week inflows or outflows, green being inflows, outflows being red, pretty self-explanatory, about the amount of Bitcoin being added to US Bitcoin ETFs, right? Now again, this isn't the global data here, but I think this is already going to show us, broadly speaking, that the global trend is worse than the US, mind you. The US is driving this, right? So I don't want to be seen as, I'm not trying to manipulate the data, this is the visualizations we have to work with, but it shows us what's really going on here. And that is that over time, while we've had our outflow weeks, and those obviously are not good for the net number, we also have something that's actually much more concerning. When we do get green weeks, when we do get that surge of inflows of institutional capital, of new money coming in, it has gotten generally weaker over time. And we're getting a lot more red weeks and a lot more neutral weeks versus that first, really 2 months worth of inflows from January and February that really drove Bitcoin from where it was at around the ETF launch, if I'm not mistaken, around 42,500, all the way up towards that $70,000 level, right? We had very clear correlation, more spot demand for Bitcoin, driving up the price, clearing up the order book, not enough sellers, and therefore the price spread plays into effect that prices can essentially move up in Bitcoin's price. We saw this here in January. Buyers came in at the 100-day and drove things up with resiliency. Notice the difference in the reaction. We didn't spend any time below the 100-day there. Buyers came in, they started spreading out the price here and driving prices higher. That was the kind of resiliency we would like to see at the 100-day in order to be bullish. We are not seeing that now. And you're just not seeing it in the inflow numbers as well. Take a look at it in another perspective. This is essentially here a month-to-month basis here. This is so far in the month of June. We've got about 17,000 Bitcoin coming in. To be completely fair and make sure we understand the data right, we're only reading about half of the month's data here, so we have 2 more weeks to go. So overall, I'm not even here to say that the current monthly data is terrible by any means. Looks okay. But look at the broader trend. Since back in February, where we had 116,561 Bitcoin being purchased that month, we have yet to outpace that month. And in fact, we are getting incredibly far away from what we were getting in those first 3 months, in the first quarter. Just take a look at comparison. 33.5K, 116.5K, 65.5K. April, a negative outflow month of 6,000 Bitcoin. May, starting to show some signs of potential optimism, right under about 30,000 or 29.5K BTC. Now we're about 17,000. And we just had a outflow week here. So we've got to see whether or not we're going to be able to continue getting up there. The fact of the matter is, though, is that what we are seeing very clearly is that we're not getting anywhere near those optimistic numbers that are really consuming a large portion of Bitcoin, right? On a global scale, coming back to that chart, if you really think about it, for the last 3 months, we've only added about 50,000 Bitcoin. To put that in perspective, right, this is the big catalyst. This is where really institutional money from any corner of the world, this is the last major inflow ramp that we really have for crypto from an investment perspective, right? From new participants coming in. Retail, institutional, hedge fund, family fund, traditional commercial banks that have an ability to expose themselves to risk on assets or hedges. Everyone can do it now. And we've added 50,000 Bitcoin. It might sound like a lot, but if you take it by the supply, it's less than 0.25% of all Bitcoin. Less than 0.25%. So my point here is that the ETF is really not setting in this huge surge, just swallowing up all the demand of Bitcoin. The narrative you've been sold by a lot of people, I think, is well overdone. At this point, the ETFs are priced in, they have been readily available for multiple months now, and we are seeing that there's not the kind of inflows that I think a lot of people were expecting to continue maintaining. And we can see very clearly that irrespective of whether or not you think these are good inflow numbers, I think there's definitely a degree of subjectivity there. I'm not here to be a perma bear. I understand some people might see this as optimistic. Just take a look at price. It's clearly not enough, guys. It's clearly not enough here to counteract what is likely going on that so many people, unfortunately, are not factoring for here. And that is the concept that for every buyer here from a spot Bitcoin ETF, there's someone selling. And more importantly, broadly speaking, what determines the direction of price? There's always going to be buyers and sellers in trades. The problem is who is outweighing the other side when it comes to market order flow, right? So those Bitcoin ETFs, right? There's no guarantee that they are market order buys, right? They could be limit orders. It depends on how BlackRock essentially goes out and actually purchases these Bitcoin as well as the other ETF providers. But generally speaking, that's market order flow when there is a clear imbalance of supply, right? That's what drove this price action. What we see now is inconsistency here in the trend. And this likely means that in the broader spot market, you can include ETF inflows in that as well, but the broader markets that determine the spot Bitcoin price, there are more market sellers, people taking the best available price to sell their Bitcoin position into cash, than market buyers who are willing to take their cash position and just buy Bitcoin at the best available price from a seller who's willing to sell. Right? And this is what's going on here. This is why we're basically, if you want to view it in a more neutral way, since back here in March, even though there's been some volatility to the upside or downside, we've seen very clearly that we've been in this kind of neutral amount of buy side and sell side pressure. The market is trying to determine clear trend direction. And I think over the past few weeks here, as we've gone through the earlier part of the month of June, I think it's starting to showcase very clearly, it's at least giving us hints, if you don't want to call what we've experienced a correction. I think very clearly we're seeing signs that that correction is ready to play out, that there is not enough buy-side demand so far. At least that's what I would say if I were giving you guys my honest take. And this leads me to talking a little bit about realized market cap and R-HODL. Now, there are a lot of data science models out there. I'll even take a look at one that might be leaning more towards the bullish side in the long term, but shows problems in the short term. I want to spend some time to talk about the R-HODL ratio. This is a free data science model, lookintobitcoin.com, that essentially dives into the unspent transaction outputs on coins and focuses on the realized value of those coins, or essentially the value at which those coins were. Now, this takes into account a key set of data points that are focused on different time windows when it comes to realized market cap. But I want you guys to take a look at here on this chart here. This has been one of the data science models that's showcased in prior cycles when things were getting overheated. In fact, it was quite consistent here in 2011, here in 2013, and here in 2017. But in the last cycle, we started to see something very clear here. The R-HODL ratio, which used to top out anywhere from around 100,000 to 200,000, set in a top significantly lower, around 15,000 points. And so far, we're already at 7,750. Now, why am I talking about this here? The reason I'm talking about this here is because what a lot of people don't consider is people think, especially with Bitcoin's branding, that everyone's just hodling forever. Like, hodl, 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 don't sell your Bitcoin to the institutions, yeah, whatever. The general kind of community thesis. And look, I'm all behind that. If you guys believe in the vision, that's cool. I'm not here to insult anyone. What I am here to say, though, is that it's not true. And there are still lots of whales. There are a lot of people who got in way before you or I did, who were mining 50 Bitcoin blocks when a couple halvings back, when the monetary policy was much more inflationary for Bitcoin, on their GPU or CPU. Essentially on their computer, they were able to mine, even before ASICs were a thing, just tons and tons of Bitcoin. And they are slowly but steadily over time looking at how Bitcoin's price is coming up, how many of them are sitting on tens, if not hundreds of millions of dollars, if not billions of dollars, and starting to think, maybe I start selling a little bit. Right? Maybe I'm gonna start unloading some of my positions, right? And they're not gonna do it dramatically fast, right? Unless they really feel they need to. They're going to distribute. They're going to slowly sell over time. They're going to DCA out of positions as people are trying to DCA through the ETFs, right? And the key point here I wanted to mention is that not only are you going to have, because of this, diminishing returns in the underlying asset price over time, we can clearly see that here going from 105 to 14,000 and now 7.7 thousand on the R-HODL ratio, right? But beyond that as well, it is going to take much more liquidity to sustain these current price levels. to be able to have the same kind of drive and force, right? If I, for example, we consider the actual like dollar amount here, right? Back a couple cycles ago, if you had a day of $217 million worth of buy-side pressure, you are going to drive Bitcoin at a minimum double digits. I'm talking 20% at a minimum, because Bitcoin's market was so much in its infancy at that time. There weren't that many traders coming in. Now, you need billions of dollars to have that kind of same impact, right? You need to have multi-billion-dollar inflows on a weekly basis to really make those kind of same numeric percentage returns when it comes to Bitcoin's price. That's not me being bearish, that's fundamentals when it comes to markets. So this kind of explains the whole Bitcoin scenario. I hope that kind of puts things into context. You have diminishing returns over time, you've got weakening ETF inflows versus what is needed to sustain current prices and actually drive them higher. And outside of that as well, we can see from the data science models that we could very well already be way overextended in the short term. And what I want to propose here today is I'm not here to say that Bitcoin can't go to six figures, right? We can see very clearly that in the MVRVZ score, some of the other data science models, which have held more consistent, even in the last cycle, that we may very well have some good room to go from here, right? In the grand scheme of things. So I'm not here to badger and say that Bitcoin can't go to six figures. I'm not here to say that Bitcoin's going to $0 or it's never going to set a new all-time highs. What I'm here to say is that in the short term, it's overextended. You can see very clearly that after we came into the accumulation range of the MVRVZ score, one of my favorite data science models that I've used over the years, perfect range to accumulate every single time. What we see here is that we get these initial rallies around the 2-point plus range here. We've had them in each cycle, and this time around we went all the way to 3 points, the most overextended we've been. So what I think this tells us here is that we are likely overextended in the short term, and as we've seen throughout the last cycle, where we were able to come back down to the green capitulation channel, or at least below the 1 point range, likely around 0.5 to 0.6, on both of the previous corrections. Basically below the 1 point range if we're being fair here. We only went to 0.79 here back in 2017. My point here is that we're at 2.11 right now. So we've probably got a ways to go in this correction. If you want to even believe that we're still in the 4-year cycle and we're playing things out as it usually does considering the halving event. I don't know if I believe that we're going to be repeating history so smoothly, but I do believe that there is clearly a sign here of a correction in the short term that is needed. And this isn't just me bashing on Bitcoin. I love Bitcoin fundamentally. I think Bitcoin's a great thing. And I'm happy that the ETFs are out there. I'm totally behind it. So don't take me as me attacking the markets. I'm just trying to explain what's going on here because I'm not going to lie to you guys. If you take a look at Bitcoin or Ethereum here, the broader crypto market, and you're being fair and look at a price action, you will see the warning signs. You will see that after the ETF announcement, we were not able to get Ethereum above the ETH to BTC ratio 200-week moving average, right? Same resistance range since back here in October. Not to mention, as we've pulled back here, we're now facing chop and resistance at the 21-day moving average. We should be able to hold on that 21-day. We should have not broken below the 21-day there on that fade and pullback. Instead, we're spending a lot of time with these long-term moving averages. And the question is, can we really make that support? Not looking too good. Not the worst chart by any means. Definitely, obviously, good news when it comes to the ETF for Ethereum. But again, how much are those inflows really going to matter when a lot of people are seeing the ETF opportunity, both in Bitcoin and Ethereum, as a reason to offload and sell to the new wave of participants, right? Essentially, what I think everyone, whether they want to admit it or not, is hoping for, that the institutions will buy their bags, so to speak. They will buy their positions and they'll be able to cash out at a premium. That's been on the minds of so many people, whether they want to admit it or not. And there's nothing wrong with that at the end of the day. You were early to the trend. You did the research. You denied, you shunned away from all the doubters and those who said you were crazy for buying Bitcoin and altcoins early on. I was one of those people in 2017, and I was also someone who shunned a lot of people who participated owning Bitcoin back in 2011 and 2013 because I didn't take the few minutes to read the white paper, right? It's as true as history itself that markets will reward those who are early to the trend, who realize the value potential early on. And latecomers are going to unfortunately get punished for buying in when everyone's FOMOing, when everyone thinks it's guaranteed that the number has to go higher. Take a look at others' market cap here, guys. This is all the crypto market excluding the top 10 plays. we are now for multiple days trending below the 200-day moving average. Remember last time we came here to the 200-day, last two times, boom, bounce up higher here from $228 billion to $290 billion. Boom, within a couple days from $236 billion to $289 billion. But after multiple months, I'm not being able to get back above those two significant red candles, getting back up to that $325 billion range, and not able to hold on the 100-day moving average like we were back in the past. Clear predictive signs here that we've talked about for well over a month now that have proven to a large extent that we are more likely than not ready to head lower and probably head down to the next key level here, which was the prior support range, $180 billion back here in January, which is right where that 200-week moving average is sitting cozy and waiting for price to arrive. Not saying it has to hit that level exactly. I think we're going to be closer to the 200-week than to basically sitting where we are at the 200-day. I'll put it that way. We do not see buyers coming in eagerly here, and that is a very worrying sign. You see others' dominance dropping from around 13.5% from back here in December 2023, March 2024, double top clear here. But along with that as well, we are now down to 10.3%. So we have dropped more than 3.25 percentage points here. Excuse me, we're coming up here on about 3% lower from where we were at this prior highs, right? 3% down already. And it looks like we're very much likely to come down here towards the lower single-digit 9% range before we can really start to recover higher. Now, I want to go ahead and dive into some individual plays here. You know, a lot of the plays we talked about this year, we focused on trying to kind of filter out the noise, focus on the key narratives that are resilient, that are kind of timeless within a potential bull market, right? And we focused on DeepIn or AI plays that are focused on GPU resources for AI. We focused on Bitcoin infrastructure, right? Those are the kind of key narratives that I think are just kind of timeless in this cycle. And we can see very clearly that render against Bitcoin, man, it is at the same level it was at back here in December. Not too far off from where it was back in May of 2023. So it's really faded a lot of its gains against Bitcoin. And now, very clearly, unlike back here in the past where we had a resilient buy side pressure coming in here at the 200-day, back in the past, not even coming down to that 200-day since back here in November, we have now started to treat the 200-day as resistance. Not a good look here for the AI-related crypto plays. Take a look at Stacks. Had a really nice run up here back above the 21-day, got a lot of people FOMOing in, changing their mind on where things were going. But if you just look back at history, you'll see the same thing happens time and time again after a deviation after a couple weeks below that 21-day, the 200-day moving average, the blue lines. And when you know we came back up, used it as resistance, collapsed back down, we are back where we were at square one, back where we were back in early June. And I think this is just going to move lower and lower and lower as distribution plays out, as long-term holders who bought at the lower range are taking profits, or those who've been holding bags from up here finally starting to capitulate and drive prices lower with no serious buyers in sight. Those are some of the plays that we've talked about kind of in the mid-cap range, a couple $1 billion in market cap that really have that 3, 5, maybe even 10x potential in the right environment. But there's also the large cap plays. Solana, clear just distribution phase here. Not selling fast enough to panic people or crash the chart, just enough to steal money blindly from people on a day-to-day basis who are unsuspecting buyers, going off and taking their Solana, maybe flipping it on meme coins, etc. The time to do that is over, guys, at least in the short term, in my opinion. I think it may come back with a vengeance in the next couple of months, but I think being long on Solana now, when we've got such a gap away from the 200-week, which mind you is in line with that prior support range back in November, right? And also the prior support range back here, back in September 2022 and October 22, which snapped after resistance at the 200-day. I think that that is going to come back as a level of interest here for the broader market. We have BNB as well. A lot of people were like freaking out about BNB setting new USD all-time highs back a few weeks ago. And look at its BTC chart. It's barely hanging by a thread on the 200-week. It's not trending at all-time highs. And now, of course, I understand they're talking in dollar terms, but who really cares about where BNB is in dollar terms when it's still where it was back in June of 2023 against Bitcoin? You've been completely in a bad position holding BNB, unless you bought down here at the December lows, which many people didn't do. So it's up slightly from that period of time. It's made a nice percentage move from one of the larger cap plays, but still nothing really to take home or be really optimistic about. We've got a long way to go before BNB really can substantiate a longer term trend. not to mention with the regulatory pressure around Binance. Take a look at Dogecoin here. Couldn't even get above the 200 week against Bitcoin. Yikes. What happened last time when we tested the 200 week? Well, we surged up big time because Dogecoin was really one of the only meme coins there. So you got to have your focus on the other plays in the market other than these kind of large cap plays that are very heavy and are clearly not showing that there's anywhere near enough liquidity to drive them higher. So when I focus here on the kind of opportunities here in the market, guys, I focus in on altcoins. And while I might sound very bearish here in the short term, it doesn't mean that I don't see greener pastures. I do believe that as we start to correct down to this lower range here in July and August around this range of support in the past, that there could very well be a good risk reward setup for altcoins. I think when Bitcoin comes down here below the 200-day, deviating where a lot of people think might be the ultimate range of support, once we break that, and we come down and test a previous range of significance here around 50 to 52K, I think that there might be very well some buyers coming in there. And I would want to have my liquidity ready on exchanges. I want to have it in my crypto wallets. I want to be ready to strike and take upon those opportunities when everyone's going to be getting liquidated, when everyone's going to be capitulating, everyone's going to feel that, oh my God, the market cycle's over, it's never coming back, Bitcoin and crypto is done for, right? When people are thinking that, that's when I want to strike. And there are a couple different things you should keep in mind. We talked about, Render, we talked about stacks. Those are two quality plays you should keep on your radar, and you should be looking for discount entries in accordance to history. But outside of that as well, there are also some key projects that I think you guys should keep in your radar, and also some ways where you can get access to early stage projects in the crypto space or early stage ecosystems. One of the things that I want to let you guys know about is one of our partners here on the channel, and that's Zero. If you guys haven't been diving into Zero alongside our other plays we talk about, like Radix or Energy, you guys should definitely be doing some due diligence on these, because I think as we move later on in the cycle, if we have that opportunity for a real altcoin cycle move, people are going to be looking for emerging narratives. They're going to be looking for infrastructure plays, which is always kind of a safe bet in my view, and projects in which are actually doing unique things. In the case of Zero, adding additional layers of privacy towards native blockchain networks. In this case, Zero is utilizing a directed acyclic graph model, so it not only scales much further than traditional blockchains, but outside of that as well, by utilizing zero knowledge proofs, it allows people to actually have shielded transactions. This is a feature that's going to come out down the line in the next couple of months, and is a staple of why Zero is such a big blockchain to watch on your radar. The Most Bridge is also live, so you can start bridging liquidity and assets over to the Zero chain. But outside of that as well, they also have Aliphoria. Now this is a way again where you can get kind of early stage exposure towards a whole range of different projects within the Zero ecosystem, where you'll be able to get airdrops in this case, different types of rewards for participating, whether it be the native decentralized exchange or automated market maker Common, which is one of the staple plays on the network, or Kensu, as well as a lot of different GameFi projects like Darkverse. I definitely recommend you guys test it out, give it a try, and also get a feel for the Zero network to get a feel for what it really offers as a project. Definitely don't want to be sleeping on what Zero is building, and I think it's one of the few solid L1s that actually has an ability to disrupt some of the market dominance of Solana and Ethereum. But outside of that as well, we also have one of our other partners, AngelBlock, which is one of the major fundraising protocols in the Web3 space that I feel is kind of in a league of its own after so many launch pads have kind of come and gone. AngelBlock has been really resilient in bringing about really quality projects and emerging narratives in a whole range of different ecosystems. One of them that they just announced recently is the Squatify raise. This is going to be launching on June 25th, so about a week out from now. If you guys are interested to dive into the details, you can do so through the tweet on their page. You should definitely follow them over on Twitter, but check out some of the details around Squatify. This is kind of a SocialFi or eToro styled platform for DeFi. And for me, I really like things like this that are consumer facing, that are mobile first, that are really easy and familiar for people to use, and can actually bring in a whole new wave of users. Not to mention, it's focused on the base ecosystem, which has been probably the hottest L2 or emerging ecosystem in the crypto space. So again, AngelBlock has been at the curb of a lot of these trends. They had one of their initial first raises was a Solana-based project way back during 2023. They've been really good about focusing on getting it on emerging ecosystems within the crypto space and early stage projects. There's also the Lingo community round, which we'll talk a little bit more about as more details come about, but this has also been one of the most anticipated raises, and they were able to get an allocation as well for participants in the Angel Block ecosystem. So because you're interested to learn more about Angel Block, learn about how Thole plays a role in determining your status within the Angel Block ecosystem, I definitely recommend you guys check out the website. We'll leave some links down below in the description. There's some great details and documents on the website that you can learn about in order to understand how to participate and benefit best from participating in either Angel Block raises or participating in Aliphoria, one of the big airdrop and early stage adoption campaigns for Alip Zero. But coming to close here, guys, I wanted to talk a little bit here about equities, and this kind of brings me to talking about my broader concerns here in the short term for the next couple of months, and that is the excessive excitement around AI. I'm definitely, as much as the next guy, someone who's come on to the idea that generative AI could really be disruptive in a lot of ways, in a lot of positive manners. It's definitely got its faults, but at the end of the day, NVIDIA here is, I think, a prime example of showcasing that euphoria time and time again repeats. And we're seeing very clearly, I think, a similar structure to what we saw during the last peak back here in 2021, where we had this pullback towards the 100-day and a breakout here up towards the historic line of resistance. And we are clearly pressing on the higher end of this here, and this is very similar to the kind of percentage trends we saw in the first rally of nearly 1,200%. My main point here, though, in saying all this, though, is that we are getting towards the higher end. We are getting towards the higher end here of not only the AI euphoria, but along with that as well, the performance and the broader stock market because of the Magnificent Seven. These big technology companies that have really been eating up a lot of the market share. And the S&P 500, which compiles the top 500 stocks here, concentration of the 500 largest companies. These stocks, as a conglomerate here, as an index, are coming up here towards the historic line of resistance we talked about in the last couple of episodes. And I'm going to keep iterating this here because until this line is broken here, we've got to treat this as heavy resistance that should not be discounted or discarded. This is a very critical level to see. And who knows, I'm not saying there isn't a chance it can be broken through, but the more and more we move closer to it and we don't have a clear confirmed weekly breakout or monthly high above that resistance, I'm much more eager to stay in cash. Let's just put it that way. Whether it be crypto, whether it be stocks, you name it. We've come up here from the October lows from around 3,500 all the way up to 5,400. And I think that we're going to 5,500 here. I think we'll tap that. But I think afterwards, it's high time for a substantial correction. We haven't had a substantial pullback in the market since back here in August from 4,500 down to 4,100, and that is still relatively small. We've had much more sizable corrections of 15, 20, 25% in the past. I think you could get something much more powerful here. So keep that in mind here when you're watching crypto markets. I think crypto, whether it be Bitcoin or altcoins, are on the risk tail end of assets. I know we like to think that Bitcoin is this hedge, that it's finite supply, it's better than gold, whatever. At the end of the day, on a performance basis, during risk on times, Bitcoin outperforms. During risk off periods, Bitcoin underperforms against the broader asset markets. That's a clean-cut fact, right? So we have to put aside our biases. We have to put aside our, hodl, Bitcoin doesn't care. It's its own thing. It's always going to go up and to the right. We need to be much more skeptical here, guys. Bitcoin is a multi-trillion-dollar asset. Altcoins are a multi-hundred-billion-dollar market. When I was trading altcoins for the first time, they were a couple $1 billion maximum in 2017. I think coming to a point here where crypto markets and the broader cycle trends of the past are no longer going to work as they used to. And Bitcoin is no longer an infant asset. It's at a $1.3 trillion market cap. And we got to start treating it as such when it comes to our trading expectations. So, I rambled on a good amount here today, guys. I hope I answered the big question on a lot of people's minds about where Bitcoin is heading, why it's heading there, why we're stalling. If you enjoyed this video, consider dropping a like. It's a great way to support the free content we put out on this channel. And outside of all that as well, feel free to check out the partners we have on this channel. We wouldn't be working with them if we didn't like them, guys. They are quality projects out there. They're projects I've wanted to work with for a long time, and I'm really happy to have them on as official partners on the channel. So that's it for today's video, everyone. Thank you all so much for watching, and I'll see you guys in the next video next week. Take care, everyone.